If you've been investing in the stock market, you've probably noticed how ridiculous it's been the past few months. It's been a series of wild rides up and down and up and down. We've had multiple days now where stocks just absolutely fell off a cliff and then proceeded to be bought back at the end, just to fall again tomorrow and then surge the next day. It's gotten particularly strange and very, very volatile. And you've also likely heard that the Fed has just been printing money like there's no tomorrow. There are a lot of numbers being thrown around for how much money they've actually printed so far. Generally, people are saying around 20 to 30% of all the dollars ever printed in the history of the United States. And while it's hard to pin down an exact number, we can see from the money supply charts, there has been a huge surge of money printing. A massive spike up to try to cover all these stimulus and other virus-related bills. It's been a really weird time in the market, and I want to try to address some of the big points we're seeing and other things being brought up, and talk about why the market has been so strange recently. What I have up on my screen right now is the NASDAQ, which is a collection of stocks that has a very heavy tech focus, and it's very common to see this used as a status of the current health of the tech industry. It's no surprise in 2019 we saw some pretty ridiculous things with the current outbreak of the virus, and a lot of companies dropped like rocks. There was a huge, horrific economic impact. If we go to the S&P 500, which covers 505 of the largest companies in the United States, then we can see a much more pronounced dip. There was a huge sell-off, and we had multiple suspended trading hours because of the insane volatility, also known as circuit breakers. But there was a recovery, and after a few months, we were actually trading higher than that. However, a lot of that was fueled by the tech sector. With all these people being forced to stay at home and interact with technology, really, we saw tons and tons of video conferencing, remote work, other technologies like that, as well as companies that relied on at-home services or entertainment like Netflix or Amazon. I just want to point out how awful this image is, the fact that they are putting a CPU in upside down. But I really did want to talk about the huge shortage we've seen in computer chips. And it's not because we are completely running out of raw material. Yes, there's been a pretty big disruption in supply lines, but the major fabs like TSMC are actually at almost 100% capacity. Everyone is trying to get more and more chips. The tech sector absolutely took off, and huge corporations that were in the tech sector that dealt a lot with personal computers, video conferencing, other things like that, saw tremendous growth. And we've seen a continued heavy backing for these huge corporations. Apple in particular, for being such a large corporation, just had a lot of money dumped into it. And it's grown and grown and grown. However, fairly recently, we've seen a huge dip. Now, if we go back to the S&P 500, we're still trading pretty high for a 2-year. In fact, we're technically at an all-time high. However, the tech-focused NASDAQ is not doing as hot. If we zoom in a bit more, we see there has been a bunch of ups and downs, and it's not trading at an all-time high. Really, what we've witnessed is huge sector rotation, and some of it has really been staggering. Tesla this past year dropped a third of its market cap. And Tesla is no longer a small startup anymore. It's a huge company in the S&P 500. And this is particularly shocking because the fundamentals for the company really didn't change. In fact, with their progress on full self-driving, it seems like things have been getting better and better for them. What's also surprising is that a lot of cryptocurrencies like Bitcoin have been doing really well, with a surprising amount of stability this year, for crypto at least. And if we want to be technical, there are other services that did also do well outside of the tech industry. In particular, firearm purchases have skyrocketed. There's no great way to tell exactly how many have been sold because there's no registry in the United States, but FBI background checks are used for the vast majority of purchases. And even though they can contain multiple firearms on one check, they're a pretty good metric of how many firearms are being sold. And we, unsurprisingly, have had record highs in 2020. What's also interesting is because of export and import laws relating to defense sector items, a lot of the production and materials are 100% domestic. So the impact for the supply line is not the same for a company that uses international parts or relies on other countries shipping things out. If you like this sort of content, I would highly appreciate it if you gave the video a thumbs up. as well as subscribe to the channel. If you want constant notifications for whenever I release a video, just click the little bell icon. I really appreciate your viewership, so thank you. So we've seen huge sector rotation. Airlines in particular have seen a lot of love very recently. They were trading extremely low and then absolutely soared up. Here's American Airlines as an example, which is unsurprising because things are slowly going back to normal. Vaccines are being rolled out, cases are declining, and people are sort of just getting sick of all of these lockdowns. So we've seen very, very heavy sector rotation. However, when it comes to relative market cap, American Airlines is not that massive. $14.7 billion is a substantial company. They're not a mom and pop shop by any stretch of the imagination. But when you consider $2 trillion companies like Apple are not trading at an all-time high anymore, like companies like Tesla are below $600 billion now, losing a huge amount of their market cap. There's a lot of sector rotation, but there's also a lot of money just straight up leaving the market. When you really take a look at the numbers, you can see that a lot of investors are really pulling out. So we do get sector rotation into these companies that will be doing better once all of this is over, but we also get a lot of money exiting the market. So why is that? Why is the market so weird? Why are there all these stocks that just have zero resistance, going down, but then some surges here and there? A lot of it is really just based around uncertainty. The number one thing that major investors hate is uncertainty. They don't want to be playing a game of musical chairs with their stocks, because if they get caught in a bear market for years, well, that's pretty painful, especially because a lot of these huge traders use borrowed money, margin accounts. When you're trading with extreme leverage or extreme margin, you have a time frame associated with your positions now because you're paying interest on that borrowed money. So a lot of investors just want to weather out the storm, and different things change that make weathering that storm more preferable. One of those is a treasury yield, and there's multiple different lengths of treasury yields. The one you might have heard about a lot is the 10-year treasury yield, and a million people have said this multiple times, so I'll just reiterate some of these key points. You're lending money to the federal government when you purchase a bond from them. Whenever you purchase a bond, you are getting this percentage yield from the government. Since you're lending them money, you're sort of acting like a bank, giving them a loan. And despite all this money printing and other issues and concerns about the government, other things like that, the U.S. has done a very good job of paying back their debts. U.S. bonds are treated with pretty high quality. They are seen as a very safe investment, especially relative to stocks. And bond prices are a market, essentially. If not a lot of people are buying, then the government is going to have to increase the yields in order to entice more people. If tons of people are buying, then the government can lower the yields, not pay them as much money, and still get all of those loans. And the 10-year is very special because it's used as a proxy for mortgage rates and rates for other long-term loans as well. So it becomes a rising yield, indicating a falling demand for treasury bonds, which means investors want higher risk, growth-focused stocks, much like tech stocks, which have traditionally been seen as growth stocks and are able to grow their market cap almost exponentially. And a falling yield is the exact opposite. Like I mentioned before, the people buying in are going to be the ones setting the price. It's really just supply and demand. A lot of these massive tech-focused corporations like Tesla had tons and tons of money in them. However, there's a lot of uncertainty right now about things like inflation, about huge crashes in the market, other things like that. The market's been weak because these large institutional investors really don't want to dip their toes in what they perceive as a lot of these growth stocks. And even though we are seeing a decent amount of money put into assets like airlines and other companies that are going to be doing much better once all of this is over, they still have relatively low market caps compared to some of these tech Goliaths. And we've reached an interesting point where the US Treasury yields over the long term are very attractive right now. When you have a large amount of money and you are concerned about not just the market, but also inflation, you don't just want to let that money sit in your bank account because inflation is just going to slowly kill it. It's going to make it worth less and less each year. These really large institutional investors are loaning the government tons and tons of money and getting a consistent return with these bond yields, which is preferable to just letting it sit and waste away to inflation. There's a lot of uncertainty out there, a lot of concerns, and these large investors are moving their accounts around like crazy. So we get market rotation and tons of weakness in the market, but then also surges when it seems like a good time to buy in. It's been particularly weird, and the reality is that there's just so much uncertainty that these big account holders really don't want to deal with it. So what exactly do you do with this current market? Well, despite the highs and lows, if we look at the US economy over the long term, it's done quite well. Let's extend out this NASDAQ to 5 years. We see a lot of growth, continued growth. And while there are big drops, especially right now, does that mean in a couple years from now it's going to be worth less? Unless we see significant issues in the United States, not likely. Now, this can be pretty rough if you're in your retirement age where you just want money for your 401k. It can be sort of difficult to pull money out if you have to wait a couple years. So for young people, it's not particularly concerning unless you took on positions that rely heavily on timing, such as options, especially short-term options, shorting, margin, anything that you have to take a loan out for, things like that. So if you're down on your current positions, assuming they're solid companies, have their fundamentals changed? Are they dramatically different for the worse since you bought them? If not, it might just make sense to continue holding. Over time, the market has generally done quite well, especially in the past 10 years. And a lot of these companies like Tesla are getting closer and closer to huge technological innovations like full self-driving. With a huge dip like this, if you've been looking for the next Tesla, then it's probably just going to make a lot more sense to just purchase Tesla. Whenever you're dealing with uncertain times, if you want to stay in the market, I would really advise dealing with positions that you can ride things out on, which means don't trade on margin, don't mess around with options unless they're over the extreme long term, and just be cautious. Because if we're seeing a lot of fluctuations, a lot of mess, we don't know how long this is going to take till it resolves, because the people who really prop up a lot of the stock market are these large institutional investors. And if there's too much uncertainty, well, they're going to be very hesitant on the market, especially when it comes to things they consider growth stocks. If you're big on options, you might want to consider plays that will allow you to ride out time, such as spinning the wheel, where you sell cash secured puts on a stock. If you get assigned, you simply hold that stock and then sell cash-covered calls. It's a completely different way of doing things rather than just purchasing something like a call and having it be either worth a lot or be completely worthless at expiration. These are all really critical things to understand and deal with, and I hope this video clarified some things about what exactly is going on in the market, why is it so volatile, and how exactly you should be dealing with a situation like this. Remember, don't get too discouraged, especially if your positions are down now. If you panic sold or you dealt with options and are losing a lot of money, well, that's a different story. It's going to be painful for you. But trying to hedge your positions by opening short positions at the same time on your options so they expire at the same time, that can help mitigate some loss if you do it correctly. But really, I wish all of you the best of luck when you're out in the market investing. If you're interested in investing in the market with self-directed trading, a fantastic way to start is with Webull. If you sign up now using my referral link in the description of this video, you'll get 2 free stocks valued up to $1,850. And these stocks are selected from companies like Facebook, Starbucks, Snap, Google, Procter & Gamble, and more. All the money in your account is yours to invest, trade, and withdraw as you please. There are 0 fees associated with depositing money. You just get your stocks and you'll get your buying power immediately. So if you want a fantastic brokerage with mobile, desktop, and web trading, just use the link in the description below.